Okay, welcome to Chapter 6 on process costing. In Chapter 6 we continue from what we did in Chapter 5 with job order costing, and we now look into process costing. So remember, we're going to use process costing when we have a manufacturing process that has the same processes happening to the product or the service. So in other words, pretty much homogeneous products. They have the same type of activities being performed to them, and the output is about the same amounts of cost. So process costing usually is sequential. So here's an example showing you, you can also follow that example in the book, making a pill. We mix it, we put it into the pill container, we bottle, we finish goods. We may be making different pills, but obviously they're all going to be going through the same basic steps. We also have parallel processing when we have two or more sequential steps to finish a good. But essentially, we're able to see the value that's added at each point in the manufacturing process. Again, can be applied to products or to services. So what's in common? When we have the process costing products, we have homogeneous units that all get the same operations and process, okay? So approximately getting the same cost. So contrast that with what we did in the last chapter where we're talking about a job order system. In a job order system, we had different and unique products that were getting different amounts of costs added to them. In a process costing system, now we have homogeneous products or services. The cost flows are the same for both processes though. So we still have work in process, we still finish goods, we just have different ways that we're assigning the cost that we're adding to those products. Okay. So we have cost of goods sold, we have work in process, the accounts, the journal entries are all the same. You would not be able to immediately tell looking at a company's financial statements whether they're doing job order or process costing because the journal entries would look the same. When we have a process costing system, we usually have a separate work-in-process account for each processing department, so we can basically assign the costs and move them along with the product. So as a product finishes one unit, one department, and goes into the next, the cost would go with it. Remember, we only need these work-in-process accounts because as accountants, we artificially are going to say, okay, as of January 31st, we're going to take account and measure all the costs. We're not waiting for the batches to be finished because something's always going on out in the factory or with the service that we do. So as accountants, we artificially chunk up the time, which is why we have to have these work-in-process accounts, because at the end of our given month or year, some stuff is still in process. So here's how it looks in the cost flows. Again, using the example of our pill manufacturing process, we have the mixing department, which is making the raw material that goes inside the pill, and you'll see here herbs and vitamins and minerals and labor. And then where they put them into the pills, you'll see all those costs come with it, and then we add the capsules and the labor from that department. And then when we get to bottling, all the costs of the previous two departments go with it, and then we add the bottles and the labor, whatever else is going on. So remember, as we go through the steps in the process system, the costs that came before it come with the product, and then more cost is added. So we keep transferring the cost from one department to another, adding more, transferring that on until we get done with the product. So let's take an example that'll help us understand the cost flows. Here we're making 2,000 bottles of multivitamins, and we have three departments: mixing, encapsulating, and bottling. You can see the direct materials, direct labor, and overhead that's assigned to each. And it says calculate the costs as they're transferred to each department and do the journal entries. So let's look at how this would look. You'll see these are just summing up the costs that you were giving. The mixing department had 2,200 of costs. So that 2,200 goes to the encapsulating department, and its costs are added to it. Those costs then in total are added to the bottling department along with the costs of the bottling department itself. So you see how the costs keep transferring. And these are how the journal entries work, moving it from one work in process to another, until ultimately finished goods. This 5460 would reflect all of the costs added in all three departments. So you see we just keep pushing the cost forward until we get to a total. Okay, service firms also obviously have process costing capabilities. and even possibly have work in process. So they use the example here, an accounting firm has a batch of tax returns that are partially completed. Okay. So with our service firm, what's nice about it, we can take the cost for the period and divide it by the number of services provided when we are looking for the unit cost for a service firm. So if we prepare tax returns, we can take all our labor costs and whatever else other paperwork costs we might have, divided by the number of tax returns and get a pretty simple unit cost. Okay, manufacturing firms don't all have a lot of work in process because they use a just-in-time approach. Now, if you've heard of just-in-time before, that means we're trying to operate as lean as possible so that we only have inventory. We try to minimize how much inventory we have. So, in other words, something's made just as it's needed to the next department. So one department is only making what the next department needs, and things are flowing quickly. So just-in-time certainly is congruent with what we're talking about in process costing, and it, again, is a way for us to be able to track those costs that go through the process. So when we have just-in-time, very often we have cells rather than necessarily departments. So we would collect the cost by cell and then transfer them from one cell to the other. And again, we can take our total costs and divide by the output. Remember back in the job order costing chapter, I told you the easiest way to tell if we're approaching something that should have job order costing versus process costing. Job order, if we take the total of the cost and divide by the number of units, that unit cost doesn't make sense. Remember I used the example of having built 10 customs homes. We can't take the total cost of home building, divide by 10, and say therefore each home cost us this, because those homes could be very different size and have very different materials. But here, as we're looking at with process costing, you know, when we're making 100 bottles of vitamins, we can take the total cost to make 100 bottles of vitamins and divide by 100. That makes perfect sense because they're all going to get the same amount of cost, approximately the same treatment. So that's when process costing works. So traditional manufacturing firm tends to have a lot of work in process inventories, and it makes it a little tough for us because, you know, what is finished? If I want to take the total cost of vitamins and divide by the number of bottles that I made to come up with the per unit cost, what do I do about the vitamins that are half done, the ones where I made the pills but I didn't bottle them yet, or they're mixed but they're not encapsulated? How do I figure that out? That's the problem of this chapter. Process costing makes perfect sense, and it's super easy if I have no work in process inventory. I just take the total cost, divide by the number that I finished, and there's my cost per unit. The problem comes up when I have these partially completed units. And of course we have an answer for you as to how we're going to treat that. And that's really your work this chapter, is treating those. That's the tough part of the chapter. Alright, so when we have this work in process, we need to figure out these costs. Okay. Again, we're going to divide the total. With work in process, that total is difficult. So here's a great sentence. Defining the units produced can be difficult given that some units produced are complete while those in ending inventory are not. Okay, so we have to come up with a way to handle those, and we do it by equivalent units of production. So in other words, we have some stuff that we've put cost into, but we haven't completed yet, and I still need a unit cost per unit when I'm done in order to price, in order to make strategic decisions and everything else. So the question is, what do I do with that partially completed stuff? Okay, how should the beginning work in process, and how should the ending work in process be treated? By its definition, ending work in process is not complete. So a unit transferred out during the period is not identical to our ending work in process because it's not finished. So we have to have this way of defining how complete it is in order to assign costs appropriately. So the solution to our problem is something called the equivalent units of output. Equivalent units of output are an approximation for how many units are produced based on how complete the rest of the units are. Okay, so let's go a little further here. Every transferred out unit is an equivalent unit. That's simple. If it's done, it's a done unit. The ones that are not done yet are what we have to figure out to estimate their degree of completion. And this is somebody's judgment call. Okay, so here's what we have. We've got whatever the product is. It doesn't tell us here the product. We have 100 completed units, so those are clearly completed units. Those are done. Each one is one. Then somebody looks and says, you know what, we have 200 other units that are about halfway done. So what we're going to do is a very rough approximation is say, well, if I have 200 units halfway done, it's about the same as having 100 units. Now I can take my units completed, my costs, and divide it by my 200 units of equivalent units, and now I can come up with some information. So the concept of equivalent units is messy. The math is very easy. Okay, so don't get too bogged down in the concept when you're just doing the math. So here, 200 units, 50% complete, simply multiply 200 times 0.5, and you get your equivalent units of 100. Here our problem says, October data, we have 1,000 units completed, and 600 of those, and 600 more units are 25% complete. So what do I do about that? Well, my 1,000 units that are completed get rolled over. Those are 1,000. There's no math involved. Those are done units. Each counts as one. Then all I do with my partial units is take 600 units times, in this case they were only 25% complete, times 0.25, and I get 150 equivalent units. I add that to the 1,000 that were completely complete, and I get 1150 equivalent units. That 1150 equivalent units is the number then I can divide all my costs by to come up with a per unit cost. If I didn't do this, okay, if I took my total cost and divided by all the completed units only, I would be assigning them too much cost because some of the costs that I incurred went to those units that weren't done yet. So I would be overcosting my product, which might lead me to set too high a price, which might lead me to lose business. Now if I do the opposite and I say I'm gonna treat them all as a unit, so I'm going to take the 1,000 units plus the 600 units even though they're not done, and I'm going to divide all my costs by 1,600 and get a per unit cost. Well, now I've not costed things enough. I've set the cost too low because there's more cost that has to be added to those units, and I may underbid a project and I may end up winning jobs that I can't make money on. So both problems are problematic. Now this equivalent unit, some of you who are more detail oriented may say, oh, I don't know, that sounds a little too like you're eyeballing it. You're right. Somebody's just going out and estimating. It's like if I assign you the job of making cupcakes for class, and I say, okay, how done are you? And you look at them and say, well, I got them baked, but they're not frosted, so they're about 70% done. It's just your estimation, but again, the people doing it, their estimation are better than any of ours because they know the product best. So this is a way to try to get the unit cost to line up with reality. So we can do, you'll see throughout your chapter a couple of different methods for how we treat the work in process inventory that's coming in. You'll notice we're only going to look at the weighted average costing method. For purposes of this class, we're not going to get into some of the more complicated ones like FIFO. Just, it's something that you may never have to deal with. So we're just going to do the simpler method, which is most widely used, which is the weighted average costing method. The weighted average just combines all the costs that come in along with the cost done to calculate the unit cost. So in other words, when I bring units in that are partially complete and they bring their costs with them, I have to recognize that those are old costs. So the costs may have changed, inflation or changes in the marketplace may have caused the new costs to become higher, but I'm not going to worry about it. I'm going to figure it's all going to come out in the wash, and I'm just going to use the weighted average. So the costs and work carried over from the prior period are counted as if they belong to the current period. I'm not making an adjustment to today's prices. I'm just bringing them in at what they were and adding current costs to them, and it's all going to average out in the end. So this treats beginning inventory cost and the equivalent output as if it's current unit cost. And again, unless you're in an industry where costs are really wildly changing and staggering, this probably is not going to be a material difference, and certainly not enough that would justify getting into a more complicated costing scheme. If for some reason your company was in a situation where this was not accurate enough, then you would have to switch over to one of the other costing methods. So here's what it's going to look like. All right, here's our, and again, you can follow these in your book. We're going to look at this process, whatever it is, on July 1st. So always pay attention to those dates because July 1st means that's the beginning. We had 75% complete 20,000 gallons. So 20,000 gallons of whatever it is we made was 75% complete. Then during the period, we completed and transferred out 50,000 gallons. At the end of the period, so our ending process, or July 31st, we had 10,000 gallons that were 25% complete. And there's our costs, okay? So we have to figure out how to treat this cost information. We're going to use the weighted average method. Again, don't get too hung up on it. But what I want you to think about, what you have to keep in mind, these units that we started the month with, if they were 75% complete, we finished those, right? So we completed and transferred out 50,000 gallons. So that means all those units plus more were finished. So don't get hung up on adding all these together. These 20,000 became part of the 50,000. All right, so let's look at how this works. So our 10,000 units that were completed, we had 10,000 units that were 25% complete. And I showed you the little 25%. So 60,000 total units becomes 52,500 equivalent units. Okay, so let's talk about this here. We had 20,000 units that we completed from work in process, 30,000 that we started and completed. That was the 50,000 that we talked about. Remember in the previous slide it gave you 50,000 completed. So there's our 50,000 completed. Now we need to come up with a method to treat the ones that we didn't finish. Well, that's those 10,000 units up here that were 25% complete. That 10,000 times 0.25 is 2,500. So now I add my 50,000 and my 2,500, and I get 52,500 equivalent units. So again, the math isn't too hard. You just have to be very careful not to overthink this. All right, so now I can take those total manufacturing costs that the problem gave me, the stuff that we started with, the beginning work in process, plus the new July costs. I get a total of 13,650. I divide that by the equivalent units, and I get 26 cents per equivalent unit. So you can see for my costing system, I'm going to take 26 cents times 50,000, and I'm going to transfer out 13,000, okay, from my work in process into my finished goods account. My ending work in process is going to be the 26 cents times 2,500. It's going to have 650 left sitting in it. So I take all these costs and assign them based on my unit cost I calculated using the equivalent units. So that's how this all comes full circle. Now this will be my debits and credits for my journal entries to move it from work in process to finished goods, and then eventually from finished goods to cost of goods sold. Okay? So this is the end of process costing. I'm hoping you understand the play between job order costing and process costing. You're not going to use them together typically. You're going to pick one or the other, and you're going to determine that based on whether the cost of the products that you're being, or service that you're making, are homogeneous and like, then you use process. If they're custom and different, then you're going to use job order costing.